This is the second video for this chapter when we're talking about the format of the income statement. In the first video we went through basically a general overview of the entire income statement. So we talked about continuing operations, discontinued operations, extraordinary items, other comprehensive income, EPS. We talked about the whole format and about some of the things that made each section unique. What we're going to do in the next couple of videos is we're going to focus primarily on continuing operations. So we want to just see how do we deal with that continuing ops section. So we have two options, if you remember from the first video, single step and multi-step. We're going to calculate tax once for the entire section regardless of what method we're using. But when we say single step or multi-step income statement, it's only referring to the continuing operations section. So what I want to look at now then is the single step income statement. And this one's very, very basic. It presents only two groupings for the entire section. The main heading, or the first heading, is revenues. And this includes all of your gains. So you're basically just going to list out all of the individual revenues that you've earned during the period. So it could be sales revenue, it could be rent revenue, interest revenue, it could be the gain on the sale of an asset. Okay, any type of revenue stream, dividend income, it's all listed under one heading, revenues. There's no differentiation between what's operating and what's non-operating. All your revenues are located in one section. And then we subtotal up the section and say total revenues. The second section is your expenses section. And it includes losses and income taxes, which is optional. We'll talk about that in a second. But again, same idea. You have an expense section heading, says expenses, and then you just list off, and you can group them in however you choose, whether by nature or by function. But you just list them off, right, individually or grouped as you like, all your different expenses. So it could be cost of goods sold, it could be advertising, it could be salaries and wages, commissions, depreciation, it could be income tax expense. Whatever the case may be, all of those expenses are simply, again, just listed under the expense heading. And then you subtotal them up and you get a total expense figure. So the way you get to net income is to just take your revenues minus your expenses, and that's net income. One thing to keep in mind is that minimum disclosure rules still apply. So what you read in the chapter with regards to minimum disclosure, needing to show your cost of goods sold separately, needing to show your sales revenue separately, needing to show interest expense separately, how we group, whether it's by nature or by function, those rules can still apply, right? But again, you only have two sections, revenues and expenses. The other option for professional judgment or for personal preference is how we deal with income taxes. So if you choose, you can actually include your income tax expense right up in the expense section with the rest of the expenses. So you literally would only have revenues minus expenses equals net income, right? Or if you have other sections, income from continuing operations. All right. Alternatively, what you can do is you can break your income taxes out separately. So you can show all of your revenues and then a subtotal. You could show all of your expenses and then a second subtotal, right? So you have total revenues and total expenses. You could subtract your expenses from your revenues to get a net figure, and then if you want, you can subtract your income tax expense from that. And that will get you to your income from continuing operations. So we'll talk about that in a second when we look at an example, which is on the next slide here. So when we look at this as an example of Hunter Company, their income statement for the year ending December 31st, 2009. Okay, and this is a single step income statement format. Notice they've got two sections, revenues and expenses. Okay, they've only got one revenue listed, the net sales of $653,000. But again, if you had interest income or if you had rent income or dividend income, any of those types of revenue sources, the gain on the sale of an asset, right? Any of those other revenue sources would all be captured up here in the top section under revenues. And then we would do a subtotal that said total revenues. Okay? And the expenses and losses, that's our second section. Remember, two sections, revenues and expenses. So we've got our expenses and losses, and they've got some things listed here, cost of goods sold, selling expenses, general and admin, loss on the sale of land, interest expense. So you can see that they've condensed it quite a bit by grouping all of their selling expenses together and grouping all of their general and admin together. Okay? But again, In that second section, they just listed all their different expenses and then they subtotaled them up. So the subtotal that they came to was $604,000, right? So now that I have my total revenues and I have my total expenses, I'm going to subtract one from the other. I subtract my expenses from my revenues and I realize that I have an income before tax of $49,000. So you can see that in this example, they've decided to do an alternate method where they keep income tax expense separate. So they give you an income before tax figure of $49,000, and then they subtract their $10,000 income tax expense to get to net income of $39,000. Okay? Alternatively, what they could have done is they could have taken that $10,000 and they could have brought it up into this expenses and loss section, right? So if they would have brought that $10,000 and slotted it in up here somewhere, this new expense total would have been $614K. And then all they would have done is revenues of $653 minus expenses of $614 equals net income of $39,000. So that, in a nutshell, is your single-step income statement. Revenues and expenses with a bottom line subtotal. Now again, they obviously don't have any discontinued ops because they went right to net income here at the bottom, but we know at this point that there also could be other sections, extraordinary items, discontinued operations, okay? So if we did have discontinued operations, the naming recognition of this subtotal would change. It wouldn't be net income anymore. It would be income from continuing operations after tax. All right, so that's the format. So why would we do it? What's the advantage? Well, the advantage, I think you saw, was that it's pretty simple and easy to produce. So if you've got a company that's quite a bit smaller, maybe doesn't have the same sophisticated reporting requirements as a much larger company, maybe that's all that they need is just to show two headings, revenues and expenses, and get that out there. This is what my income statement looks like. This is what my profit was for the year. Maybe that's all that they need. So a single step works for them because it's simple and easy to produce and it keeps their costs down. Another benefit is that the reason it's easier is that it eliminates the need to classify revenues and expenses between operating and non-operating. So one of the biggest issues or one of the common areas for mistake in a multi-step income statement is classification. Classifying something as an operating expense when it really should be non-operating or vice versa. So a single step gets rid of any classifications. We don't have to worry about anything extra. It's just revenues and expenses. The disadvantage is that you don't get that added detail. There's no breakdown between operating activities and non-operating. So the statement itself isn't quite as informative for your financial statement readers. So there's benefits, there's pros, there are cons. Typically it's a smaller company that would use something like this, but in a nutshell, that's your single-step income statement. Two sections, revenues and expenses. And then it's your choice how you deal with income tax expense.